Welcome to Moat Main, clear thinking for uncertain times. This weekend, Berkshire Hathaway held one of the most important shareholder meetings in modern history. Warren Buffett, 95 years old, more than $400 billion in cash, and an entire investing generation waiting to hear what comes next. But before the market could even process Buffett's message, something strange happened. A fake Warren Buffett clip started spreading online. The voice sounded real. The face looked real, and millions of people couldn't immediately tell the difference. And just like that, the Berkshire meeting stopped being only about succession, because Berkshire Hathaway was built on one assumption: rational decision-making. And deepfakes attacked the foundation of rational decisions, trust in reality itself. That may sound dramatic, but Buffett, Greg Abel, and Berkshire are quietly preparing for a world where clear judgment becomes more valuable than ever. And honestly, that may be the real lesson from this year's meeting. Most headlines focused on the obvious story. Buffett is getting older, Greg Abel is next, the end of an era. But the deeper signal was hiding underneath the headlines. Berkshire Hathaway is slowly transforming from a company built around one legendary investor into a system designed to survive uncertainty itself. And Greg Abel matters more than people realize, because Abel is not another celebrity investor. He's an operator. He built Berkshire Energy, infrastructure, utilities, real-world systems, not hype, not predictions, not financial theater. And in the AI era, that distinction becomes extremely important, because while the internet obsesses over chatbots and viral tools, AI ultimately runs on physical infrastructure, electricity, power grids, data centers, transmission, operational reliability, the invisible systems underneath modern life. That's operator thinking. And Berkshire may be positioning itself for a future where reliability becomes more valuable than excitement. But the most important thing Buffett said this weekend wasn't actually about AI. Berkshire Hathaway is now holding more than $400 billion in cash and treasury bills. And people keep asking the same question. What is Buffett waiting for? But that's probably the wrong question, because Buffett doesn't build around prediction. He builds around preparedness. And Buffett understands something many investors forget during long bull markets. Good opportunities usually appear when people become emotional, not rational. That's why Buffett has always treated cash differently than Wall Street. To most investors, cash feels unproductive. To Buffett, cash is optionality, patience, strategic flexibility, the ability to move decisively when other people freeze. And that becomes especially important during periods where markets are expensive, narratives become extreme, and certainty becomes artificial, because modern markets increasingly reward confidence over accuracy. Fast opinions, constant reactions, infinite prediction. Buffett operates differently. He waits. And that's the part people misunderstand about Buffett. He's not pessimistic about America. He's pessimistic about human behavior during extremes. Buffett still believes extraordinary businesses compound over decades. He just refuses to overpay for them. That discipline may look boring until volatility returns. And this is where the fake Buffett video becomes more important than people think. Because deepfakes are not really just a technology problem. They're a decision-making problem. Modern life already overwhelms people with noise, outrage, financial predictions, algorithmic manipulation, and emotional pressure. Artificial intelligence accelerates all of it, which means the real economic advantage of the future may not simply be intelligence. It may be judgment. The ability to verify information, resist emotional reactions, think probabilistically, and avoid impulsive decisions during uncertainty. That sounds abstract. But Buffett built an entire empire around exactly those principles. Not speed, not excitement, judgment. And ironically, that old-fashioned discipline may become more valuable in the AI era, not less. So what does all of this actually mean for ordinary people, especially knowledge workers, professionals, people trying to build stable lives in an unstable economy? Honestly, probably 5 things. First, stop confusing information with understanding. The internet rewards immediacy, but good decisions usually require distance. Second, build financial flexibility, because uncertainty punishes rigidity, and flexibility creates options. Third, treat emotional stability like an economic asset. People make terrible financial decisions when they feel scared, rushed, humiliated, or desperate. Fourth, invest in durable skills, not just trendy tools. Communication, judgment, operational reliability, the ability to solve real problems. Those skills survive technological cycles. And fifth, build one system that reduces emotional decision-making. Automatic investing, a fixed savings transfer, a checklist before major purchases, a rule for verifying financial information. Because Berkshire wasn't built on emotion, it was built on systems. That's why this Berkshire meeting felt bigger than a normal shareholder event. It felt like a transition, not just from Buffett to Greg Abel, but from one economic era to another. An era where information becomes cheaper, certainty becomes weaker, and emotional reactions become increasingly monetized. And in that kind of environment, clear thinking becomes a competitive advantage, not just in investing, in life. Because the people who thrive long-term usually are not the loudest, or the fastest, or the most confident. They're the people who consistently make reasonable decisions while everyone else becomes emotional. That's the Berkshire model. And honestly, that may be one of the few models that ages well in the AI era. In a world of deepfakes, the most valuable thing you can own is a real decision-making process. What do you think becomes more valuable in the AI era? Speed or judgment? Comment below. And if you want more videos about clear thinking, investing, and modern uncertainty, subscribe Moat Main, Clear Thinking for Uncertain Times.